Welcome to Talker Tickers. Today, we're digging into AST SpaceMobile's Q3 2025 earnings call. And let me tell you, on the surface, the numbers look like a miss, but that's not the real story here at all. All right, let's get right into it. Starting with those headline numbers. Yeah, the initial print looked like a pretty clear disappointment against what Wall Street was hoping for. And you can see it right here. Both the GAAP EPS and the revenue, they came in below the consensus range. Now, that EPS miss was pretty significant, right? Negative 45 cents, that's well below even the low end of what analysts were expecting. And yeah, revenue had this massive year-over-year growth, but it still fell short. So on paper, not a great look.
But here's what's really interesting. Look at how the market reacted, or rather, how it didn't react. A double miss like that? Normally, that would send a stock like this tumbling. Instead, it barely moved. That right there is a massive clue. It tells you investors are looking right past these backward-looking numbers, trying to find the real story.
And that brings us to the story that management was really excited to tell. It's a story all about commercial traction and a much stronger balance sheet. You could feel the pivot during the call. They wanted everyone to forget the financials from the last 3 months and focus on the future of the entire company. And the CEO, Abel Avalon, he set the tone right away. He basically said, hey, behind the scenes, our commercial activity has accelerated significantly. The whole call was just this drumbeat of commercial progress, one win after another. It was a clear strategy to overshadow that financial miss. And this isn't just talk, right? They've got the deals to back it up. We're talking a definitive agreement with Verizon to cover the entire continental US, a massive 10-year deal with STC Group in the Middle East that even includes a $175 million prepayment. I mean, when you add it all up, their ecosystem now covers nearly 3 billion potential subscribers. That is a huge number. So on one hand, you have this earnings miss, this negative 45 cents per share. It's a backward-looking number, right? It's what happened. But then management drops this bombshell. They contrast that miss with a brand new disclosure, over $1 billion in hard contracted revenue commitments from their partners. That was the number they wanted everyone talking about. It was designed to completely reframe the entire investment case right then and there. And this just perfectly illustrates the most crucial takeaway from the whole call. Management basically said, look, with $3.2 billion in pro forma liquidity, the money problem is solved. The financing overhang that has been hanging over this stock for so long, gone. They're now claiming to be fully funded to build out a global constellation of over 100 satellites. For a company that has been constantly battling capital concerns, this is a total game changer. Okay, so if the funding is secured, the whole narrative shifts, right? It pivots completely to one thing, execution. The question is no longer, can they afford to build it? It's now, can they actually build it and get it into orbit on time? So let's look at the roadmap to their 2026 service goals. And management didn't pull any punches here. They laid out a very specific, very aggressive launch timeline. They're aiming for 5 launches by the end of next quarter. That is a blistering pace. The big goal here is to get 45 to 60 of these satellites up and running by the end of 2026. That's what they need to kickstart continuous service in their key markets. So beyond just launching rockets, these are the key proof points the market is going to be watching like a hawk. Did they actually hit their revenue guidance for the second half of this year? Do we see service actually switch on in the US, Japan, and Canada in early 2026? And what about that new government contract? Can they get it finalized? These are the milestones that are going to prove whether this story is real or just, well, a story. Okay, so let's put it all together. We've got a story of financial misses, some huge commercial wins, and a super high-stakes execution roadmap. What does this all mean for the stock? And more importantly, what should we be looking for on the next call? And this really is the central question for anyone looking at this stock. Do you bet on the disappointing numbers from the past? Or do you bet on this ambitious, well-funded plan for the future? It's a classic Wall Street dilemma, reported history versus promised potential. And the debate here is crystal clear. The bulls are saying, hey, this company has de-risked its balance sheet, they've locked in Tier 1 partners like Verizon and AT&T, and they have a clear path to making money. But the bears, they're pushing back, pointing to a history of delays and saying, look, the market is rightfully skeptical until these satellites are actually in orbit and generating real revenue. It's a classic show-me story. So our analysis really suggests the next 6 months are going to be absolutely critical. Forget the financials for a minute. The stock's performance is going to be almost entirely tied to their ability to hit that aggressive launch schedule. The launch manifest is now way more important than the income statement. Which brings us to our rating. We're initiating coverage with a market perform. Look, the upside potential here is immense. It's huge if they pull this off. But the execution risk is just too big to ignore until the company proves it can deliver on this timeline. The story is compelling for sure, but the market is in show-me mode for a very good reason.
And finally, we have our required disclaimer.
Okay, so this analysis is for informational purposes only, and it should not be considered investment advice. And that leaves us with one final thought to chew on. With the company now claiming to be fully funded, has the biggest risk here simply shifted from the balance sheet to the launch pad?